Tantor Audio, a division of Recorded Books, presents Day Trading for Dummies, 4th edition, by Anne C. Logue, MBA, narrated by Janet Metzger. Publisher's note: in this audio edition, you will hear references to figures, graphs, and tables present in the print and e-book formats of this book. Limit of liability, disclaimer of warranty. While the publisher and author have used their best efforts in preparing this book, they make no representations or warranties with respect to the accuracy or completeness of the contents of this book, and specifically disclaim any implied warranties of merchantability or fitness for a particular purpose. No warranty may be created or extended by sales representatives or written sales materials. The advice and strategies contained herein may not be suitable for your situation. You should consult with a professional where appropriate. Neither the publisher nor the author shall be liable for damages arising herefrom. Introduction. A lot has happened in the world since the first version of Day Trading for Dummies came out. Mobile apps, tax law changes, and an entirely new asset class, cryptocurrency, have changed the world of day trading. There have also been changes in global politics and economics that have created increased volatility, and traders love volatility. Savvy people looking for success in day trading need an up-to-the-minute reference like this new edition to steer them straight. Day trading is a business in which you use real money to take on the markets. If you love the thrill of the markets and have the patience to sit and stare at a screen for hours, waiting for the right moment to get in and get out of securities, then day trading may be a great career option. But it has risks, too. Any day can be your best day, but it can also put you out of business forever. For that reason, day trading requires the right psychological makeup. Good day traders are patient and decisive, confident but not arrogant. They most certainly are not gamblers, although day trading attracts gamblers who discover it's a great way to lose money from home. Day Trading for Dummies, 4th edition, is for people who are looking for a new business or who simply want to supplement their investment returns with new techniques. In this book, you can find all the information you need to determine whether you're cut out for day trading, to lay out your home office, to research and plan trades, and more. And even if you decide day trading isn't for you, you can still find lots of sound general advice about markets, trading, and investing strategies that you can benefit from. Plus, you'll have saved all the money you would have otherwise invested on research and training, not to mention the trading losses. A lot of people make a lot of money selling services to neophyte day traders, claiming to be the best thing going. And maybe so, for some people. In this book, I give a wider perspective. Instead of telling you to use a particular trading strategy, for example, I help you research and evaluate the different day trading methods available so that you can find one that works for you. And I also tell you up front that if you decide to day trade, this book shouldn't be your only guide. About this book. First, let me tell you what this book is not. It's not a textbook, and it's not a handbook for professional investors. Several of those are on the market already, and they're fabulous, but they're often dry and assume you already have a lot of knowledge about day trading. This book doesn't make those assumptions. It contains straightforward explanations of how day trading works, how to get started, what the pitfalls are, and what some of the alternatives are for your portfolio and for your career. It's designed for you to be able to skip around and read the chapters or sections that interest you without having to read every word that comes before them. This book has more than enough content to get you started, or to guide you to something that's a better fit for your sensibilities. If you really want to read some textbooks, I list a few in the appendix. Oh, and I like to think this book isn't dry either. Foolish assumptions. In writing this book, I made some assumptions about you, the reader. You're someone who needs to know a lot about day trading in a short period of time. You may be considering a career change, looking for a productive part-time retirement activity, or bored and looking for a challenge. Maybe you just want to know if day trading is a good way to supplement your current investment program. Whatever your reason for considering day trading, you want to know how to decide whether it's the right option for you. If you already know that day trading is right for you, you want to know how to get started, from opening an account to setting up your computer monitors. And yep, that's plural. You have extra money to trade, whether it's yours or not, and you want to try day trading techniques to goose up your portfolio returns. You have some understanding of the basics of investing, that you know what mutual funds and brokerage accounts are, for example. If you don't feel comfortable with that much, you may want to read the latest editions of Investing for Dummies or Mutual Funds for Dummies, both by Eric Tyson, published by John Wiley & Sons, Incorporated, and then come back here. I can wait. Icons used in this book. As you read this book, you'll see icons scattered around the margins of the text. Each icon points out a certain type of information, most of which you should know or may find interesting about day trading. They go as follows. Remember. This icon notes something you should keep in mind about day trading. It may refer to something I covered earlier in the book, or it may highlight something you need to remember for future investing decisions. Tip. Tip information tells you how to invest a little better, a little smarter, and a little more efficiently. The information can help you make better day trades or ask better questions of people who want to supply you with research, training, and trading systems. Warning. I've included nothing in this book that can cause death or bodily harm, as far as I can figure out, but plenty of things in the world of day trading can cause you to lose big money, or worse, your sanity. These points help you avoid big problems. Technical stuff. I put the non-essential but often helpful academic stuff here. By reading material marked by this icon, you get the detailed information behind the investment theories or, sometimes, some interesting trivia or background information. Where to go from here? Well, open up the book and get going. Need more guidance than that? Then allow me to give you some ideas. You may want to start with chapters 1 and 2 if you know nothing about day trading. If you need to get set up to start trading, look at chapters 14 and 15. If you want to know some different ways to trade, turn to chapters 5, 6, 8, and 9. If you want to learn the key to better trading, Chapter 7 covers trade planning. For ideas about developing strategies, whether you're going to hold for a few minutes or several years, go to Part 2. In addition to the book content, you can find a free online cheat sheet that includes information on accounts, definitions, indicators, and performance calculation. Go to dummies.com and search for day trading to access this handy reference material. You can print it and keep it by your side as you get started. Bottom line, anywhere you go, you'll find interesting and useful information. 1. Getting started with day trading. In this part, get comfortable with the basic idea of day trading, the process of making a large number of short-term trades during a single day. Understand the different things that you can trade to help you find those that suit your personal style and risk profile. Find out the basics of markets, trades, and strategies to help you get started if day trading is right for you. Discover how to plan your trades so you can trade your plan and increase your chances for success. Chapter 1. So you want to be a day trader. In this chapter, figuring out just what day traders do, setting up a trading business, knowing what being a successful trader takes, dispelling a few day trading myths. Can you make a fortune at home in your bunny slippers by trading the markets? Maybe. But let me get a few things straight. Day trading is a crazy business. Traders work in front of their computer screens, reacting to blips, each of which represents real dollars. They make quick decisions because their ability to bring in profits depends on successfully executing a large number of trades that generate small profits. They close out their positions in the stocks, options, and futures contracts they own at the end of the day, which limits some of the risks. A lot can happen in a year when you're a day trader, increasing the likelihood that your trade idea will work out. But in a day? You have to be patient and work fast. Some days offer nothing good to buy. Other days, every trade seems to lose money. The individual human day trader is up against a tough opponent, high-frequency algorithms programmed and operated by brokerage firms and hedge funds that have no emotion and can make trades in less time than it takes to blink your eye. If you're not prepared for that competition, you will be crushed. In this chapter, I cover what day traders do, share the advantages and disadvantages of day trading, list the personality traits of successful day traders, and give you information on your likelihood of success if you choose to be a day trader. The more you know before you make the decision to trade, the greater your chance of being successful. If you decide that day trading isn't right for you, you can apply strategies and techniques that day traders use to improve the performance of your investment portfolio. Defining day trading. It's all in a day's work. The definition of day trading is that day traders hold their securities for only one day. They close out their positions at the end of every day and then start all over again the next day. By contrast, swing traders hold securities for days and sometimes even months. Investors sometimes hold for years. The short-term nature of day trading reduces some risks because nothing can happen overnight to cause big losses. Meanwhile, many other types of investors go to bed thinking their position is in great shape, only to wake up the next morning to find that the company has announced terrible earnings or that its CEO is being indicted on fraud charges. But there are two or more sides to every story. The day trader's choice of securities and positions has to work out in a day or it's gone. Tomorrow doesn't exist for any specific position. Meanwhile, the swing trader or the investor has the luxury of time because it sometimes takes a while for a position to work out the way your research shows it should. In the long run, markets are efficient, and prices reflect all information about a security. Unfortunately, a few days of short runs may need to occur for this efficiency to kick in. Remember, day traders are speculators working in zero-sum markets one day at a time. That makes the dynamics different from other types of financial activities you may have been involved in. When you take up day trading, the rules that may have helped you pick good stocks or find great mutual funds over the years no longer apply. Day trading is a different game with different rules. Speculating, not hedging. Professional traders fall into two categories, speculators and hedgers. Speculators look to make a profit from price changes. Hedgers look to protect against a price change. They make their buy and sell choices as insurance, not as a way to make a profit, so they choose positions that offset their exposure in another market. As examples of hedging, consider a food processing company and the farmer who raises or grows the ingredients the company needs. The company may look to hedge against the risks of price increases of key ingredients, like corn, cooking oil, or meat, by buying futures contracts on those ingredients. That way, if prices do go up, the company's profits on the contracts help fund the higher prices it has to pay for those ingredients. If the prices stay the same or go down, the company loses only the price of the contract, which may be a fair trade-off to the company. The farmer raising corn, soybeans, or cattle, on the other hand, benefits if prices go up and suffers if they go down. To protect against a price decline, the farmer would sell futures on those commodities. His futures position would make money if the price went down, offsetting the decline on his products. And if the prices went up, he'd lose money on the contracts, but that loss would be offset by his gain on his harvest. Technical stuff. The commodity markets were intended to help agricultural producers manage risk and find buyers for their products. The stock and bond markets were intended to create an incentive for investors to finance companies. Speculation emerged in all of these markets almost immediately, but it was not their primary purpose. Day traders are all speculators. They look to make money from the market as they see it now. They manage their risks by carefully allocating their money, using stop and limit orders, which close out positions as soon as predetermined price levels are reached, and closing out at the end of the night. Day traders don't manage risk with offsetting positions the way a hedger does. They use other techniques to limit losses, like careful money management and stop and limit orders, which you can read about in Chapter 2. Remember, markets have both hedgers and speculators in them. Knowing that different participants have different profit and loss expectations can help you navigate the turmoil of each day's trading. And that's important, because to make money in a zero-sum market, you only make money if someone else loses. Understanding zero-sum markets. A zero-sum game, discussed in Chapter 2, has exactly as many winners as losers. And options and futures markets, which are popular with day traders, are zero-sum markets. If the person who holds an option makes a profit, then the person who wrote, which is option speak for sold, that option, loses the same amount. There's no net gain or net loss in the market as a whole. Now, some of those people buying and selling in zero-sum markets are hedgers who are content to take small losses in order to prevent big ones. Speculators may have the profit advantage in certain market conditions, but they can't count on having that advantage all the time. So who wins and who loses in a zero-sum market? Some days, whether you win or lose, all depends on luck. But over the long run, the winners are the people who are the most disciplined. They have a trading plan, set limits and stick to them, and can trade based on the data on the screen rather than on emotions like hope, fear, and greed. Unlike the options and futures markets, the stock market is not a zero-sum game. As long as the economy grows, company profits grow, which in turn lead to growing stock prices. The stock market really has more winners than losers over the long run. That doesn't mean that any given day will have more winners than losers, however. In the short run, the stock market should be treated like a zero-sum market. If you understand how profits are divided in the markets that you choose to trade, you have a better awareness of the risks that you face, as well as the risks that the other participants are taking. People do make money in zero-sum markets, but you don't want those winners to be making a profit off you. Some traders make money, lots of money, doing what they like. Trading is all about risk and reward. The traders who are rewarded risked the 90% washout rate. Knowing that, do you want to take the plunge? If so, read on and check out Chapter 5, where I discuss risk and reward in greater detail. And if not, read on anyway, because you may get some ideas that can help you manage your other investments. Being disciplined, closing out each night. Day traders start each day fresh and finish each day with a clean slate. This daily regimen reduces some of the risk, and it forces discipline. You can't keep your losers longer than a day, and you have to take your profits at the end of the day before those winning positions turn into losers. That discipline is important for day traders. When you day trade, you face a market that doesn't know and doesn't care who you are, what you're doing, or what your personal or financial goals are. There's no kindly boss who may cut you a little slack today, no friendly co-worker to help you through a jam, no great client dropping you a little hint about her spending plans for the next fiscal year. Unless you have rules in place to guide your trading decisions, you'll fall prey to hope, fear, doubt, and greed, the four horsemen of trading ruin. Remember. So, how do you start? First, you develop a business plan and a trading plan that reflect your goals and your personality. Then you set your working days and hours, and you accept that you'll close out every night. In other words, you prepare and have a plan. That's a basic strategy for any endeavor, whether you're running a marathon, building a new garage, or taking up day trading. Committing to trading as a business. For many people, the attraction of day trading is that traders can very much control their own hours. Many markets, like foreign exchange, trade around the clock. With mobile trading apps, day trading seems like a way to make money while the baby is napping, during your lunch hour, or on just a few mornings a week in between golf games and woodworking. Remember, that myth that day trading is an easy activity that you can do on the side actually does make some traders rich. Who are these traders? They're the professional traders who approach day trading as a business rather than a pastime. They make money when traders who aren't fully committed lose their money. But day trading is a business, and the best traders approach it as such. They have business plans for what they will trade, how they'll invest in their business, and how they'll protect their trading profits. The third part of this book is about that very topic. If you catch a late-night infomercial about trading, the story will be about the ease and the excitement. But if you want that excitement to last, you have to make the commitment to trade as a business to which you dedicate your time and your energy. Trading part-time, an okay idea if done right. Can you make money trading part-time? You can, and some people do. Successful part-time day traders approach trading as a part-time job, not as a little game to play when they have nothing else going on. A part-time trader may commit to trading 3 days a week or to closing out at noon instead of at the close of the market. A successful part-time trader still has a business plan, still sets limits, and still acts like any professional trader would, just for a smaller part of the day. Part-time trading works best when you can set and maintain fixed business hours. Working on a fixed schedule helps your brain know when to go to work and concentrate on the market because the habit is ingrained. The successful part-timer operates as a professional with fixed hours. Think of it this way. My son is a patient in a group pediatric practice that has some part-time doctors. These part-time doctors keep set hours and behave like the other doctors in the practice. The only difference is that they work fewer hours each week. They commit their attention to medicine when they are on the job, and patients only know about their part-time hours when it comes time to make an appointment. These doctors don't pop into the office and start giving shots during their lunch break from their real job, sneaking around so that their real boss doesn't find out. Tip: if you want to be a part-time day trader, approach it the same way that a part-time doctor, part-time lawyer, or part-time accountant would approach work. Find hours that fit your schedule and commit to trading during them. Have a dedicated office space with high-speed internet access and a computer that you use just for trading. If you have children at home, you may need to have childcare during your trading hours. And if you have another job, set your trading hours away from your work time. Trading via cell phone during your morning commute is a really good way to lose a lot of money, not to mention your life if you try it while driving. Trading as a hobby, a bad idea. Because of the excitement of day trading and the supposed ease of doing it, you may think that day trading makes a great hobby. On a boring Saturday afternoon, you could just spend a few hours trading in the Forex market, foreign exchange, to make more money than if you spent those few hours playing video games, right? No. Warning. Trading without a plan and without committing the time and energy to do it right is a route to losses. Professional traders are betting that plenty of suckers are out there trading in just such a random way because that creates the losers that allow them to take profits in a zero-sum market. Warning: the biggest mistake amateur traders make? Making a lot of money the first time trading, and then assuming that all such successes will come as easily. That first success was almost definitely due to luck, and that luck can turn against a trader on a dime. If you make money your first time out, take a step back and see whether you can figure out why. Then test your strategy using Chapter 13 as a guide to see whether your strategy is a good one that you can use often. Yes, I have 2 warnings in this section, and for good reason. Successful day traders commit to their business. Even then, most day traders fail in their first year. Brokerage firms, training services, and other traders have a vested interest in making trading seem like an easy activity that you can work into your life. But it's a job that some people love, but a job nonetheless. Tip: if you really love the excitement of the markets, you can find ways to invest on a hobbyist's schedule. You can spend your time doing fundamental research to find long-term investments, look into alternative investments to help diversify your portfolio, and trade with play money, either in demo accounts or in trading contests, to try trading without committing real money. By all means, replace your Saturday video game habit with Forex trading if you have the money and the inclination. Just make sure to set regular hours so that you find out how the markets normally trade during that time. Track your trades, figure out what works right and what can go wrong. That's the only way you will level up in the trading game. Identifying the personality traits of successful day traders. Successful traders are a special breed. They can be blunt and crude because they act fast against a market that has absolutely no consideration for them. For all their rough exterior, they maintain strict discipline about how they approach their trading day and what they do during market hours. The discipline begins with a plan for how to start the day, including reviews of news events and trading patterns. It includes keeping track of trades made during the day to help the trader figure out what works and why. And it depends on cutting losses as they occur, reaping all profits that appear, and refining a set of trading rules so that tomorrow will be even better. No, this strategy isn't as much fun as just jumping in and placing orders, but it's more likely to lead to success. Not everyone can be a day trader, nor should everyone try it. In this section, I cover some of the traits that the best day traders possess. Independence. For the most part, day traders work by themselves. Computers and monitors are relatively inexpensive, high-speed internet connectivity is easier to get, and many brokerage firms cater to the needs of traders who are working by themselves, all of which leaves the day trader at home, alone, stuck in a room with nothing but the computer screen for company. Being alone all day may be boring and make it hard to concentrate. Some people can't handle it. But other traders thrive on being alone all day because it brings out their best qualities. They know that their trading depends on them alone, not on anyone else. The trader has sole responsibility when something goes wrong, but he also gets to keep all the spoils. He can make his own decisions about what works and what doesn't, with no pesky boss or annoying corporate drone telling him what he needs to do today. If the idea of being in charge of your own business and your own trading account is exciting, then day trading may be a good career option for you. Tip: what if you want to trade but don't want to work by yourself? Consider going to work for a brokerage firm, a hedge fund, a mutual fund, or a commodities company. These businesses need traders to manage their own money, and they usually have large numbers of people working together on their trading desks to share ideas, cheer each other on, and give each other support when things go wrong. Remember, no matter how independent you are.
Sample complete. Ready to continue?